In this video, we're going to look at big moves and the big retracements that follow. So let's just start off here quickly on the pound US dollar. We can already see some pretty big moves and big retracements. Now, when I say big, if you were to quantify this, if you get a big move that's larger than, let's say, the daily ATR, and it happens fairly quickly in this case where the market just shoots in one direction with no retracement, then you would expect it to eventually come down at least 50%. Okay, so if we just measure from the low up to the high, that is 122. So let's call it half of 122 is 61. So did the market drop back down 61? In fact, let me just stick that there. I'll get a new one. Did it drop down 61? Yeah, it did, easily. It dropped down nearly 77. So it retraced more than 50%. So it had a significant retracement. Now on news events, you very often get 100% retracement. In actual fact, you can see that's what's happened. If this is the start of the event, okay, or if this is the start of the move, sorry, you can actually see, look at that, we've retraced 100%. And this happens time and time again. Get off, I can never let go of this arrow. So this is an example on pound US dollar. Now this is all fairly short term, but I'm going to show you some long term examples as well. What I'm going to do now is I'm going to show you this move, this NFP, but on US 30. So if I just jump to US 30 and let's just have a look. So here it is. Here is the event. Let me draw it on, Alt V. This is non-farm payroll. Okay, this is the exact same move, but on US 30. Now I want you to look at the difference here. So the market absolutely shot down and then it immediately retraced 100%. Okay, so let me go on a lower time frame so we can actually see the move a little bit better. Get rid of this as well. Control and scroll to zoom in. I've not drawn that line very well, have I? There we go. Let's get it back on the flag. So here is the NFP candle. So look, the price was here. NFP kicks it off, pushes it all the way down. This is the low. And then obviously this will be 100% retracement, which we get off very quickly afterwards. Okay, so at this point here, we have retraced 100% of that news event. Now you will see this all of the time. It's very, very common. And obviously this move continued up. This actually ended up being quite a big move. And you can see, look, we're actually well on track for 100% retracement of this. Let me just draw it on. So from this low to this high, look, we've already retraced. Where's the low here? A significant, that's probably 3/4 of that move so far. And price might actually scrunch the chart up. In fact, oh, sorry, we did, look at that. We did get pretty much 100% down to this low here. So whenever you see a big move, a big strong move in one direction, you can expect a very large retracement, sort of 50% plus. Now, you don't know what you're going to get, whether it's going to be 50%, 75, 100, you don't know. But you can expect, after any big move, a big retracement. So this is another key part of the strategy, is not to panic when you sort of get caught by these big moves. So imagine then, worst case scenario, on this candle here, so 5 minutes before this news event, you put a buy trade on, okay? You thought the market was going up, and then boom, the market just drops. There's one candle just absolutely drops. And this went a long way. Let's just actually, we just measure. So if you bought at this point here, 5 minutes later, the candle closed, 163 points lower. So that's a pretty dramatic change in 5 minutes, So you might be panicking at this point. And then obviously the market did continue down a little bit over the next few candles. But if you think logically and think rationally, okay, a big move has just happened, a big retracement is now very likely, and you just were calm and you managed the trade, then, price, yes, it went down, but it came all the way back up. You had the option to exit at break even. You had the option to hold, trail or stop, do whatever you wanted to do, get out at the next level, wait for an indecision candle, however you wanted to manage it. But there was loads of opportunity to get out of this sort of situation, okay? So this is an example, again, of another short-term move retracing. Now, what I'm going to do is I'm actually going to go on the daily chart now, and I'm going to show you an example of a much longer-term move. In fact, I'm going to show you two. So here we can see one of the biggest moves that's actually ever happened on the US 30. It's absolutely incredible. Each one of these lines is 1,000 points apart, okay? So let's actually just ignore this bit down here. So that's 1, 2, 3, 4, 5, 6, 7. That's 7,000 points. And actually you can see that's pretty much 3/4 as well. So the best part of 8,000 points of upwards movement. Now the retracement so far has not even been 3,000. Okay, it's 1, 2, 2.75, let's call it. For me, that is not a big enough retracement for a move of this size. I can see, and this is a daily chart, so this will be sometime over the next weeks and months or however long it takes, but I could basically see a much bigger retracement. Now, we may get 100% retracement. It might just end up being 50, it might be 75, we don't know, but I can definitely see the market pushing down further because that's typically what it does. Now, I've said this before and people have laughed at me and said, oh no, it's an index. Stocks always go up. It's going to go up forever. It's, no, I disagree with that completely. In fact, let me scroll back in time to a period you may remember, which was COVID. So if we have a look at the absolutely catastrophic COVID drop, which was one of the most severe drops ever, and then all the crazy money printing that went on after, when the Dow Jones and most indexes actually literally doubled in like an 18-month period. Now, this obviously resulted in this massive move up, and I was kind of saying, look, after a big move up, you've got to have a big correction. There's got to be a big retracement. Now, for me, the obvious place was this high because this was the high before the COVID drop. So in my mind, the market was going to push up, and then at some point it was going to retrace. Let me see if I can draw this. It was going to retrace to that level, okay? And, a lot of people disagreed with me. And guess what? There you go. You can see the result. Was it quick? No, it wasn't. It took months and months and months. And it eventually got there in June 2022. And you can see it actually tested it again in September of 2022. It actually went slightly through it. So that was roughly a 50% retracement. Now, as I said, this is a daily chart, so you've got a huge period of time in here. This is actually spanning a couple of years, and potentially we see the exact same thing now. We've had another huge move up, very little retracement. So maybe the market's going to continue like this for a couple of months, but ultimately I think sort of 50%, maybe 75%, maybe even 100%. But I think we will see it. It's a pattern that you see in the markets all the time, okay? For me, I think predicting the direction is quite easy. Predicting when it's going to happen and how far it's going to move in that direction, now that's much more difficult. But for me, the market is stretched. It has to correct. So hopefully now you've seen and you understand that there is very often big retracements after big moves, and that you just need to be calm and deal with it. And if you've planned for it in advance and you understand how far it's likely to go and how long it's likely to take to come back, then we can work with that and we can build a strategy around that. And that's what I've done. So this is another very important sort of key component of the strategy, okay? And you've seen both short-term and long-term examples in this video, okay? In this video, I'm going to talk about the randomness of price movements in the short term, okay? So if you're on lower time frames, the price movement tends to be very choppy, it's very sideways, it retraces the same ground a lot of the time. Now we're currently on a daily chart, and as you look at this now, everyone would probably agree that there's been a massive uptrend, a little bit of a pullback, and prices pushed up again, and we're definitely still in an uptrend. This would be your sort of key support, maybe this one here or this one here, and price hasn't broken that. So we're in an uptrend, possibly turning into some kind of rangy situation at the top here, but the direction is pretty crystal clear, okay, because we're looking in a long term. Now, as you start to drop down through the time frames, okay, the direction becomes less clear. If you look at this chart here, look at where it sort of started on the left and the right. There's barely one zone of difference in this entire period, and price has literally just retraced itself endlessly. And this is just because of the random price movements. And traders, particularly when stuff like this is happening, you've got lots of news events, one of them pushes it up, the next one pushes it down, and it just totally zigzags sideways. Now you'll see this on instruments all over the place, whether it's Forex, indexes, stocks, no matter what. It tends to retrace itself a lot. So if you're using a strategy that uses a stop loss, which means you pick a particular point in the market where you exit the trade if you're wrong, knowing that price constantly retraces itself in the market, there aren't many levels you can pick that aren't going to be hit all of the time. So this is the reality of stop loss trading, is that it does not fit the way the market moves particularly well, because the market is very random in the short term. Even though the daily chart, the long-term view, we can clearly see an uptrend. Looking at this 1 hour chart, which is still a fairly high time frame, you can see now if you had to predict a direction next, there's not much to go off. It's pretty random, and it kind of gets worse the lower you go. You know, it's just, there's more chop, there's more wicks, there's more, everything becomes less clear. But what is very, very clear is that the market loves to retrace a move. If the market pushes down, it loves to go back up, down, back up, and it literally just covers the same ground again and again. Even this is a more sort of medium term move. This is a 1 hour chart. It's quite a few hours in here, probably a day or two, but ultimately the market goes down, comes back up, down, comes back up. Stop loss traders are just being annihilated when the markets do this, which is most of the time. So you need a strategy that's more forgiving, and you need to accept that this is how markets move, and then you need to build a strategy around that, which is what I've done. So this is another really important thing to understand, is that a lot of the time, if you're using analysis to predict direction, it is essentially random. You're going to be wrong a lot if you're trying to pick whether or not the market is about to go down or up, because the market very rarely just moves in a lovely straight line. It often comes back on itself significantly. If you look at this here, you may well have predicted this move up, okay, congratulations, but then it came down about 75% of the way. So if you were using stuff like trailing stops on the swings or whatever, this didn't pan out great, you know, or if your TP was set at the previous high, let's say up here, it never got there. And when you saw the market dropping all the way back down to your entry down here somewhere, would you have held it? No, probably not. It's a very frustrating way to trade. Now, if you sort of averaging and grids, the dynamic is completely different, because you have multiple trades on. Your break-even point, your take profit, all the rest of it is significantly different, and you find yourself in a profit much more often, and so you actually don't mind the randomness. The randomness actually benefits you, because all it does is trigger in more trades, which increases your lots in the market, and essentially the more the market chops and ranges, the more money you make if you do it right. So this is another key component of the strategy, is to just accept the pure randomness in the short term of the market, and accept that when you try to predict it, you will be wrong quite a lot. But if you've set out your risk management, okay, and you've set out the management of your strategy, which we'll cover in another video, if you've done it correctly, you will actually benefit enormously from the randomness of the market in the short term, okay?